All right, if you guys don't know, so David Russell is the VP of Market Insights. He runs a blog for TradeStation. A lot of good information there. I'm going to put that in the chat as well. David, whenever you're ready, I'm going to stop my screen share and you can take over.
Okay, it's great to be with everyone. Thank you so much, Nico. All right, let's get this screen share going. All right. Well, thank you. Before I get started, actually, I wanted to share, Nico, I believe is going to share a special zip file, which has a bunch of tools in it that you guys can access. I'm going to share it as well in the chat. If you have any questions, go ahead and ask me in the Zoom chat, please. And I'm going to go ahead and great. All right. So let me start off first by simply get my PowerPoint up. There we go. Great. All right. So we're talking about finding stocks to swing trade. I'm going to show you some certain kind of methods for this, and also I'm going to show you some of the ways that TradeStation can really help do this, some of the principles of it. But first, all symbols and trading ideas discussed by the instructors are for demonstrational purposes only and are not recommendations. Strategy trading and active trading is not suitable for everyone. Futures trading, options trading, and active trading is not suitable for everyone. Past historical performance does not guarantee future results and may not be indicative of future performance. All educational content and custom easy language studies provided are examples for educational purposes only. Neither TradeStation Group or any of its affiliates suggest or recommend trading indicators, scans, strategies, or any other investment or trading advice of any kind. You alone assume any trading risks associated with the analysis or trading examples provided. Okay, great. So first is about myself very quickly. I'm the VP of Market Intelligence at TradeStation Group, as Nico mentioned. And one of the things that I do is kind of the main thing that I spend most of my time with is I work on the Market Insights blog. So if you're on the TradeStation.com website and you click here on Insights, this is a blog that I help run. Comes up here, but I also am heavily involved with some of Sarah's shows on You Can Trade, including the Market Today, and that is a lot of this the stuff that that I do. And on top of that, I also help with Masterclass along with Jesus, which is a big one of the big classes here that You Can Trade. And a lot of the stuff I'm going to be teaching in many ways is based on the things that that we do in Masterclass. So first, I want to show you how to import these easy language studies. Now, if you have the zip file that I just shared with you, let me just find it here on my computer. Okay. So basically, this is what it looks like when you open up. This is a zip file. I'll have 3 items inside of it. First, this here is the is actually a PDF of my slides. If you want to take a look at that. I also, now this next thing is the most important one in some ways. It's the Trading with Style Indicators ELD. Now this has a series of TradeStation indicators in it. If you have TradeStation running and you double click on it, you'll get a dialog box like this, and then it will import a series of these custom indicators. And I'm not going to do that because I already have them on my computer. If you guys have been in some of the webinars, you might not want to import these either. But so these basically have a series of built-in studies. And then finally, once that's imported, it'll say, do you want to import all that? You're then going to double click on this swing trading, which is this workspace I have right here in front of me. And that's what I'm going to be using for a lot of this presentation. So if you have any questions with that, go ahead and let me know. And Nico's also a pro at this. He'll jump in if there's any questions. You cannot open the zip files other than PDF. Okay, great. So you need to have TradeStation installed. These are TradeStation tools. All right, so we're talking about swing trading. And what is swing trading? There's a lot of different things. Ways to make money in the market, and you can be selling income, doing day trading, and things like that. For me, what we want to talk about here is really swing trading, which is trading stocks within established multi-day or multi-week trends. Swing traders attempt to buy higher lows, looking for a higher high to follow, which you sell. So swing traders seek opportunities where stop losses can be significantly closer to the current level than the intended target. This can result in a favorable risk-reward profile. From most of the things I look at, I look for trades that last between 1 and 3 weeks, just because that kind of works with my life. And I'm not as active as trading with people like Sarah and everyone who are doing it every day in the chat room. But I look for things that have a kind of a longer term momentum and have some opportunity. And I also like to look for things where for some reason I'm not able to exactly manage it well. There's a momentum that is in my favor. I always like to look at the bigger momentum and the bigger kind of sentiment supporting my trade. It's one of the things I do that helps manage sort of some of the risk. All right, so right now I want to just mention from a swing trading perspective, we actually have, as everyone knows, some just unprecedented situations. I mean, we've never gone from a strong economy to a depression to a tech boom and now to a massive cyclical economic rebound like we're doing right now. This is really an economic situation without precedent, as many people know, but that has all kinds of implications for trading as well. And so the thing is that we're probably going to see better conditions for swing trading as the year goes on. So basically, trends develop, intensify, and fade over months. Swing traders can capitalize on these longer term patterns. So like I said, I think we're getting into a situation that could be highly favorable for swing trading, especially as we start to play in the economy reopening and some of the things that would be more kind of predictable, relatively comprehensible at this point in time. So I want to really break this down into 3 steps that we're going to cover in different pieces in this webinar. First, we want to identify a trend. We want to establish that there is a bullish trend. Right now, everything I'm looking at is essentially from the long side. A lot of this also applies, if you want to be doing bearish stuff. Right now, there's not a huge number of bearish things. So we're really, everything now just assume that we are speaking from a long perspective. I'm not long only by any stretch of the imagination, but that's the market we have right now. Okay, so first we want to establish the trend. Next, we want to find opportunities. And then the third, we want to plan and manage the positions accordingly. So there's several techniques for discovering bullish trends. All right, so let me see here. The first is really the sector approach. So we're going to start off now with over here in the workspace. You're going to notice that there's 2 tabs. I start off with everything here in terms of the sectors. Each of these ETFs, you should be able to see there's things like XLK, EEM, XLE, energy. All of these are ETFs that follow sectors. And by looking at the ETF, we're going to be able to have a sense of where strength is in the market. So one thing I kind of like to do right off the bat is all of these columns are different time frames. So right off the bat from this, you can see that on a year-to-date basis, the XRT, which is retail, not surprisingly, is the top performing ETF. And then banks and things like that. So the thing is with this is that this can allow us to look at the entire market and see where the relative strength is and where the relative weakness is. So from my perspective, this is one way to establish trend. We want to look for where the strength is, and then we want to drill down into that group once we actually establish that. Now, let me just mention that this list of ETFs is my own personal list of ETFs that I've curated. These are not necessarily trading instruments. Some of these ETFs like FDN, OIH, are not very liquid. They're not very good for trading, but we simply are using them as indexes because they're easy to compare in the radar screen here on TradeStation. So let's just start off with XRT. Now, one of the tools that we use in the masterclass is this spreadsheet that I share with customers. And this is a really useful thing. This is one of the things that you'll get access to if you are interested in taking masterclass. So what this does is, this is my spreadsheet. And so say, for example, okay, this is a list of all these stocks in indexes. So I go, I select XRT, boom. Here's my entire list of all the holdings of XRT in one easy place. I'm going to hide that. Now I'm going to go to my second panel here, my second button down here, my second tab on radar screen. And in this case, I'm looking at the whole S&P, but I only want to look at these retailers. So I'm going to select all, then I'm going to erase it, and I'm going to paste in those names I have. And now right off the bat, I've brought in a huge list of stocks, and now I can start listening for things that are, potentially have pulled back. Now, the thing about this is is that I'm going to get back to this more, but what this allows us to do is we're assuming that retail is strong because XRT is outperformed, and then we're going to drill down and look for opportunities in that. So one thing just right off the bat, I'm going to show you this later, but right here we can see this is stochastics, which is going to show us stuff that is pulled back. And right off the bat, you can see things that have pulled back. And over here, you can see actually the same price charts. The one that was grabbing my attention here was something like Nordstrom, which is kind of interesting here from my perspective. So we'll get to more of that. Now, the next way that we can look for signals are looking for things like pullbacks and moving averages and moving average crosses. And we have that right here as well. This indicator, I'm going to erase XRT and I'm going to bring back in right now data at symbol S&P 500. This is all built into TradeStation, and with these indicators, you can easily find these opportunities potentially. I can immediately, with this indicator here, I can see things that have pulled back to their 50-day moving average, for example. It's a red line on my chart. So if you want to quickly look down for stocks that have pulled back to the 50-day moving average or something like the 21-day exponential moving average, you can do that using this indicator, simply clicking on the columns, looking at the stocks that come up, and then looking down the list. Okay, so that's one thing, looking for moving average pullbacks. We also have the idea of sometimes people like to look at things like moving average crosses, and I have that built in as well to the indicator here on radar screen. This is a special indicator I created for the guys in the masterclass session. And what it basically does is it finds, when one moving average crosses another. In this case, I'm looking for the 8-day moving average exponential to rise above the 21-day. It's a common moving average cross for people looking for swing trading opportunities. What this indicator will do is this indicator will count how many days, and then you can quickly look and you can see, a stock like Apple. You can look at this blue line on my chart, rose through the gold line. That means that their 8-day moving average rose above the 21. Now, these are all different sort of signals that, that traders use. And because they're generated in radar screen, we can easily sort through them. And then the other cool thing is we can use them in Scanner. And that's another big tool that we use a lot in the masterclass session. So, let me go on now. Those are moving. So these are some ways that we can establish trends. We can find trends because a sector is strong, so we're going to look for stocks in that sector. We can look for things like stocks that have pulled back to moving averages, and then moving average crosses. All of those things can give us a sense of direction, but it doesn't necessarily always just tell us opportunities. I actually did a little bit of the opportunities here when I looked for things like, for example, the stochastic stocks that were oversold, but were in a bullish sector. So next, let's go on to finding opportunities. Ideally, swing traders want to look for you want to look for entries with 2 to 4 times more upside than there is potential downside. If we want to set a stop loss, we want between 2 and 4 times up as potential profit target versus what our stop is going to be to the downside. That way, if we're right just half the time, we still are in a situation where our winners will outpace, will be bigger than our losers. And that's one of the key things we want to be doing when we set up the trade. Going in, we want to know what our potential downside is, and then we want to look for that upside. So stop losses can be placed under a triggering low, which is essentially when the move begins. What is it, the signal that puts us into that? And I'm going to be getting into what some of those signals are. All right, so next we want to be looking at planning and managing positions. So there's a few ways to think about when we plan and manage positions. And one of the things for me that has been very interesting that I've come to really learn is that people often just look at charts, and charts are very important, and there's a lot of important things when you look at technical analysis, but very often you will find events on a calendar and things just pivot around those. I want to just throw out the idea to you guys to have an idea of what's happening on the calendar. Time considerations. Moves often correspond to calendar periods like weeks, months, quarters, holidays. So I don't know if you guys remember this, but when Tesla was splitting its stock and Apple was splitting its stock, look at the QQQ, the NASDAQ. It had this huge blow off top here. It had this huge spike, and the NASDAQ pretty much underperformed for like almost this whole period after this. Didn't hit any new highs. I mean, Apple has barely gotten back over those highs. Tesla staggered for a while after those highs and then continued higher. But this was a huge event. Everyone was talking about the stock splits. We were writing about our market insights. It was all over, mainstream news like CNBC. This was a big thing. And after that event happened, it was just dead in the water. Another one I think is interesting is, and we were recently writing a lot and talking a lot about semiconductors and applied materials in particular. We were talking about on Masterclass. This company is like the Halliburton of chips. They do all kinds of stuff to help companies make the chips. And we were talking a lot about during this whole pullback, the incredible traction that they were getting in terms of their earnings and this chip shortage we'd written about a lot. So there was a chip shortage for cars and everything like that. And then you take a look at AMAT and then the stock just has this huge surge. But then what was this right here on this day? This was an investor day and they had all this great news. They raised guidance and everything. And that was the end. And, from my perspective, I wouldn't be surprised if maybe chips are kind of, at this point in time, kind of tired. So the thing is, what does this mean? When you think about managing and a position or something, very often things are going to run toward an event. And after the event, you sell the news. So very often when we think about these things, you don't want to just look at chart levels, which is most of the stuff I'm going to talk about. But sometimes you're like, why did the stock hit that level and stop? And then you go back and you realize, oh, they had an investor day or there was something else out there. And this is especially important right now with things like earnings season coming up. It's possible you're going to have some stocks with bullish expectations. They run right into earnings. They have good news. They beat, they raise, and the stock goes down precisely because people, investors, the big investors, they will look at those events as a liquidity day. There's a lot of volume, so it's easier for me to unload a position. Retail traders should be aware of this because when you have people managing billions of dollars, they can turn around and cause harm, cause big movements that you might not be expecting. So it's important. This is not always important, but it's a good idea to always think about this when you're managing your positions and targeting where should I necessarily be selling. I just said that because for myself, I talked a lot about semiconductors and I kind of had some semiconductor positions myself. And I basically sold on that big thing from AMAT myself. And because I had seen what was coming. And then after it came up to it, sell the news. All right. So as we think about planning, there's multiple ways that we can think about setting our setting where we think the upside can be in a stock. We want to be looking at something and have a sense that there is not more downside than there is potential upside. So we want to look for some kind of, like, for example, something pulls back and holds a moving average or a level, and then that can become our stop underneath that. And we want to have a sense that there's significant space to the upside, 2 to 4 times more is what I'd like to look for. So there's a few ways you can do this. And one of the things that I often use and that we talk about in Masterclass are the Keltner channels. Now, Keltner channels, I adjusted them in my TradeStation because I didn't want too many colors. I just made them, white dotted lines. But this is basically, it's similar to Bollinger Bands. I find them more effective for this sort of stuff. But when you look for stocks, it maybe a stock, makes a move, it rallies up, hits the top of a Keltner channel. I'm trying to think of some examples of some recently, but there definitely have been some when, stock will, I don't have any good examples right now, but very often you're going to see a stock will pull back, will hit the top of the Keltner channel, it'll stop, then it will continue higher. Another one is important though. Let's look at these specific signals with specific stocks. Look at the XLE. This was a good one. This is the energy ETF. Now, this stock on the 16th of March, it fell below the 8-day exponential moving average, and it had this big kind of just pretty good stop, and drop to the downside. And after that, it was just momentum stop. So, for example, according to some of the things that we've been looking at, this could have been a potential entry like around here. And we had talked about it at different points, further back here. But when you have that sort of, move to the upside, you could say there was significant space to the upside. But once you get that signal of breaking under that 8-day, that's a potential signal, for example, that the swing could be over. Another good example, that was Facebook. If you look back in September, Facebook had the same thing right here, broke under the 8-day. And then basically this stock was in, no man's land for a long time until this recent pattern. And then some other things that are interesting. You can look for a clear resistance level. And, for a lot of people, it's not always something that they, it's not good to always be looking too far back on the chart, but you should look back, when you're looking for things to see, is there resistance or has something really broken out to the upside? A lot of the technology stocks recently, they were flying to new highs, but you can look at something like energy. And I think this is important because energy had this huge rally coming off of last year. Look at this level right here, right around 54. This was a low here, and this was a major breakdown when coronavirus hit. And where did this stock go? So if you were entering from down here, and if you were entering down here, you could say, well, I'm going to enter with a stop under my low here, which was around at that time the low on the price was around $39. You say I'll have a stop under 39. And my upside, from like 40, well, if you really think about it, even if you were targeting this level here around 45, you already had 4 times to the upside, 1 time to the downside. That was a good risk reward right there. But then if we even look further out, this should have been a level that would have been on your chart when you say, man, we're going to get up to that 54 level. That to me it's a big level. And if we get up to that level, and on top of that, when you see this break under the 8-day, that is a strong confirmation that this trend is lights out for at least for now. And at that point in time, and it's been staggering since. The other thing is sometimes you get individual candlesticks that just come out of left field and they warn you. And one of those was on Deere. Now, Deere had an amazing run recently. Some of these industrial stocks have been very powerful. And then look at this candle here. This is called a shooting star. It goes up and it can't hold those highs. If you'd been long in a name like Deere and you saw something like this could have been, kind of, a warning sign. And, one of the things that I try to do with this swing trading that I would look for is thinking about entering positions later in the day and actually doing your trading. And now, again, this is for people who don't trade as actively, who want to be holding positions for a period of weeks. But around 2 or 3 Eastern, that's when it's time to take a look and enter and exit positions. And if it was late in the day and you saw something like this on Deere, you hear of a stock that was definitely extended to the upside. It was above the Keltner channel, everything like that. And then you see this big, pattern. And now look, the stock has not been able to get back above this for like almost 3 or 4 weeks now. Look at how it's forming these other high tails up here when it just can't get above those levels. So all of this here is a kind of sign here. I mean, I'm not making comments about Deere now. I mean, I haven't really looked at it that much recently. The key thing is when you saw a candle like that, and this is one I looked at because this is one that I had actually traded with a steep pullback here, and this was when the market was really getting hammered. That this one period of time. Let's go back and actually just show you. So if you look at the SPY on this day, back at this point on March 4th, here's the S&P trying to hold its 50-day moving average. Everything's down here and people are saying interest rates are going to go up too high and it's going to be horrible and blah, blah, blah. All this, and the market just hammered down. Here it is under the 50-day moving average on the S&P, but now take a look at Deere. Deere didn't even go under its 21-day exponential, and it had a good earnings report right here. This is a classic swing trade, and this is one for me where basically my scanner showed it as having pulled back on a short time frame. This was one I was watching, and this is in some cases, this is really an example of using the relative strength of the sector and saying, you know what, the market's getting hammered. This stock is barely pulling back. It has some very short-term momentum. That's where I want to be. And I basically wrote it up there. I saw this candle, and I'm not trying to just say my good trades. I've had lots of bad trades too, but this is one where it works and when I properly applied the principles. And in this case, you had that nice pullback, and then you had up here, you had that signal. And then that's an example of, even if you thought this stock was going to 400, guess what? It just told you it's not when you see that shooting star. So one of the other things that can help you manage positions, like I'm saying here, are, a candlestick pattern like a bearish candlestick, or you can have something else like a bearish outside day. And, we had a webinar last month when we actually covered different candlestick patterns and how to read them. But these are just some things to think about. You find that downside entry, that possible entry to the downside, then you think, where's my upside? Your upside can be something like a clear resistance level, the top of the Keltner channel, or until something tells you otherwise, like a bearish candlestick or a drop under the 8-day exponential. Okay. Some more examples of just ways to use candlesticks that I think are important. A hammer is when you have a long tail to the downside and it follows a move to the downside. So a stock is falling and then suddenly it tries to fall and it comes back. So take a look at Amazon back here in May of last year. right here on May 27th. Look at that, right? It probed down and it held, and then it launched. Another example is Freeport, which is a copper company. It's actually one of the best performers this year. This pulled back to the 50-day moving average. Now, using this tool right here, this MA test, this one would have had a green signal because it was a pullback to the rising 50-day moving average. So you guys now have access to that tool in the ELD that I just shared. But this would have been a classic example of a pullback. And if you had seen a stock like this with this kind of trend, and the other thing is here you have a flat line, which is an extra level of confirmation. Again, this was a day, I think, when the market was getting hammered lower, and it pulls back, holds that level, and it has that hammer. That's a kind of signal that can help you interpret price. Now, another one I think is interesting, and I've seen this pattern recently, and I don't think it has a name. It's this thing on GM, and Ford had one, and some other companies had this. So this is like a hammer when the stock, wait a second, GM. The stock opens near the low down here, and then it comes right up, and it just flies right back up. Buyers just come in down there. And that is what a hammer is. Remember, candlesticks they're patterns, but they're really a signal. And the question is, it's kind of like someone can call you on the phone, or they can send you a text message. They say, I'll be there at 6. It doesn't matter how they call you. They're trying to tell you something. They're giving you a message. And in this, the candlestick is trying to give you a message. It doesn't have to be exactly a hammer. The key thing is, what does a hammer represent? A hammer represents the fact that buyers think that there's buyers down there, and they're stepping in, and they're willing to defend it. That's what a hammer represents, and that's in many ways what this candle represents on something like GM. There might be a name for that pattern. I'm not sure. Now, another thing is something called a kicker. Now, a kicker is when a stock gets beaten down, and the next day it just comes flying right back. So take a look at Tesla back when Tesla was really rallying. Look at this pullback here in Tesla. Let me show you this. Let me zoom in a little. This is a fascinating bit of price action right here. You have these highs from here. These are the blow off tops. And then basically the stock goes, it breaks out, and then it comes down and it closes at the low right there. And you can see right around this level, boom, it matches right over here on these old highs. That's interesting. And then the next day it jumps, and then that's it. And this is a sign that it went down there and it's not going back. This is a kicker pattern. It's an interesting pattern. I've seen a lot of them recently in the market. And let me, what did I do here? Another one was on CSX recently. What I do? Sorry. All right. So look at CSX as well. This is a railroad stock, not as exciting, but it's a very interesting one because this is basically, look at this kind of trend coming up. This is a cyclical thing that will benefit from a strong economy. They've had good earnings. It's an industrial stock, but it's a transportation stock at a time of GDP growing 6-7%. That's a sort of thing that, from a macro sector picking, perspective. And by the way, transportations have outperformed most other sectors this year as well, if you look back over on that other indicator. So this is a kicker. Goes down and it comes right back. Look at this. And the fascinating thing about this one is you can see how it was forming like a trend line on the way up. Each of these highs was lower. So these are all the sort of signals that can tell us, wow, under that kicker, that's a potential stop. And then the upside on something like this really could be all the way up here when you think about it. And if you think about this, you basically have something, if you were to enter, around 85, with a stop under like 83, that is, get $2. But then if you're taking that to the upside, you have a target over 95. So there, you right there have more than 3 to 4 times upside versus downside. That's the risk profile that we want to look for from this perspective on swing trading. Okay. So now I'm going to get you some examples. Let me make sure no question. I got an error message. Okay, so you have to update your TradeStation, and Nico, if you have any information on that, if you want to share this with his viewer, there are some ways. Why are some green candles, others empty, and others filled in? Well, on TradeStation, there's something called candle style, which is called style, and there's this candle with trend. I could just use simple candles and then everything's green. But candle with trend, what this means is, let's look at, CSX. This means that it closed down here. So when it's a solid body, it means it closed at the bottom of the candle, and when it's a hollow body, it means it closed at the top. This allows you to see the price range more clearly, and the color simply says that the closing price was above the previous closing price. So this, you can have a stock, you can have something that jumps up and it still closes at the low. I'm not sure of some examples right now, but it does happen. You can have a stock that that falls and it comes right back up, off those lows. And this tells you essentially in one shot, was it an up or a down day? And on top of telling you the direction, it also tells you where did it close relative to its open. It shows you the full range of price. And you might want to check out my my candlesticks webinar. If you look on Market Insights, I'll just really quickly show you where it is. Go to Market Insights. This might be something you guys find useful. Go to this blog, Market Insights, go to education and go to platform. And right here, this is the candlestick webinar that we did last month. And there's some other, we're gonna have some of Jesus's items in here. We have some things about using crypto and things, a lot of good resources here on these, when you go to this category called platform, education platform. Okay. So now continue. All right. So there's a few things I want to do now. I have 5 scanners I want to run through with you guys. This is the first one. So I'm going to show you how to build these, and there's explanations for them in the PDF. So if you're looking on this right now, it's on page 13. And if you look in the PDF, you're going to see that there's 5 scans, and that's what I'm going to show you. I'm not going to build all of them for time, but I'm going to show you how to do it. So let me just have this over here on my other screen so I can look at 2 things at once. Good. All right. So back to TradeStation. Now, on TradeStation, just so you know when you're looking at this thing, this is my workspace. This is Radar Screen. Okay. Radar Screen has 2 tabs. The first one is key ETFs. By the way, transports IYT are right here. You can see year to date. It has outperformed. See, I color code the SPY with this color. So everything on a year-to-date basis, it's above this amber or this yellow, basically means that it's outperforming the S&P over that period. So this is the reason. So you can look, oh, who's outperforming in the last 21 days or last month? Boom, you can see SMH, semiconductors, home builders, technology, blah, blah, blah. So just so you see how that works. So this is Radar Screen. This is one tool that has 2 tabs on it. What I shared with you on Radar Screen, you have. The other tool I'm going to use is called Scanner, and you don't have this. Well, you have Scanner, but you don't have the settings that I have. Scanner lives on your computer, so we're going to have to build the scan right here, right now, and that's what we're going to do right now. So I'm going to call this scan number 1. I use an exclamation point first, just so it goes to the top of my list, and I'm going to call this one Scan for Pullbacks. Again, we are using slide number 13. Okay. So the first thing we want to do, and I actually didn't put this on the slide, was we want to say all stocks. All of these, we want to say all stocks on the first tab. This is going to take us through a series of tabs when we put our criteria in. First, we select the universe of stocks, and you might want to do something like, you can exclude certain stocks, which in other webinars we talk about. Sometimes it's really cool to scan and remove the S&P 500, because then you start finding all these cool like stocks that Zoom Video and Roku that were maybe on the verge of entering the S&P or the NASDAQ 100. There's times when you can do that as well with Scanner. We do that in other webinars. Okay, the first thing we want to say is we want to basically say, I want to have at least 500,000 shares a day in volume. That's going to weed out like 3/4 of these, a lot of random things that no one cares about. All right, so volume average 10-day greater than 500. 1, 2, 3. No comma. So just remember, that one is simple numbers. If you put in market capitalization, which we're not going to do, but you can do, that's in millions. So 1 billion is 1,000 if you use market capitalization. All right, the next thing we're going to do is we basically want to find stocks that have pulled back to the bottom of their Keltner channel, which is this dotted line here. So what I'm going to now do is I'm going to basically say price. So here I'm going to go to this price button, and I'm going to say price, and I'm going to say low, and then I'm going to say the low has to be less than, and then I'm going to put an indicator in here, which is Keltner channel. Okay. And now I need to make sure, then this is where you can make mistakes. If Scanner doesn't work, I just want you to just remember this. You have to like double check all the little details, because like otherwise, you'll get weird stuff. In this case, it says upper band. We want that would be up here. We want the lower band. All right, so we're going to set it to lower band. And then, all right, so we want the price to be less than Keltner channel lower band. Now, here's the other thing. This is going to return like a zillion results. In a normal market, when it's not everything going up, you're going to find a lot of terrible stocks this way. So this is not good enough. We need to add another layer. And this is the great thing about Scanner. You can add all kinds of stuff. It's like mixing a cocktail or something. You can make it like this, or you can make it like that. All right, so let's add something else that is going to like find things that are in longer term uptrends. So we can do that by going to indicator. And now we're going to say, we want to find stocks with a 50-day moving average is over the 200-day moving average. If the stock's average price in the last 50 days is higher than its average price in the last 200 days, the stock must be going up. It's just simple math. It doesn't always mean you could have a stock that's flown up and then crashed, but for the most part, this is going to find stocks that are trending to the upside. So we're going to do moving average one line. Okay. I'm going to say greater than moving average one line. Now here's an important step. And I want, again, this is the thing about Scanner. I want you to write this down and don't forget it. You have to make sure that the settings are right, because sometimes it's going to automatically do this or that, which is not what you want. And in this case, it will automatically default to 9-day moving average. So you need to go in here, you need to make sure we're looking at the right thing. I'm going to change. This one is the fast one on the left that we want to be on the up to higher number and the lower number. So here we're going to change this to 50 and we're going to change this to 200. Okay. So what this is going to do is this is now going to find stocks with a 50-day moving average is over the 200-day moving average, and the price at the bottom of the Keltner channel. I'm going to run it. And now while it's running, let's go to the next slide. While that's moving. Okay. So if we are looking now, I think one way I just add to this is like, think of like in science or medicine or something where like, if you're looking for a germ, you're looking for its DNA or some protein on the surface of its cell or something like that. That is what we're doing here. We're trying to identify what's the thing we're looking for. What does its DNA look like? And then we're looking for that DNA like sample. So we're looking for things that are at the bottom, in this case, the bottom of the Keltner channel and the 50 days over the 200 days. So for example, this would have discovered IYT right here. The Keltner channel was there and the 50-day, the red line is above the 200-day. Very simple. This is going to find things again. If it's at the bottom of the Keltner channel, that it's pulled back in the shorter term. At the 50 days over the 200-day, it's bullish in the longer term. So. And by the way, this is a kicker, by the way, it's interesting right there. All right. So again, one of the things that we do is we have this spreadsheet over here that we make available with Masterclass. And this includes the holdings. And it has, how many lines does it even have? It has around 1,200 lines. And that means that, and it has about 15 different ETFs in it. Now, again, these are ETFs we're using to assess sectors. We're not necessarily looking to trade them. So we start over here on the key to ETFs, and we can kind of sense where things are doing well. So built in here, and most of these are my own custom indicators, but you've gotten them from the ELD. One of the things I like about this one is distance from 52-week high. So this basically looks at the stock's 52-week high, and it simply says, is the current price above or below it? And so the higher the number, the closer it is to 52-week high. So very often, say the market was getting hammered and it was down like 8% in the last 3 weeks or something, you want to look for relative strength. Well, one of the ways to do that is seeing who's closer to your 52-week high. And this is an interesting thing. For example, back in March, one of the things that, was interesting was I was looking for stocks that were above their 200-day moving average at the bottom of March. And stocks like Amazon and other companies, they came back a lot quicker because they exactly had that sort of pattern. So when things pull back less it can be a good sign of relative strength. It's not always true. All these things you got to kind of put in perspective. If something is way above its 52-week high, or it's at its 52-week high and it's like doubled in the last month, that's not necessarily what we want. But remember, these are for sectors. So we're looking for the things that are trending higher and that generally have relative strength. Another indicator here is simple year-to-date performance. 63-day is 3 months. 21-day is 1 month. These are just these are just bars on the chart that we're counting. And again, all of these are going to be color-coded to basically see against the S&P 500, is it outperforming or underperforming? So in the last month, semiconductors are the best performing sector. They've outperformed the S&P up 14% versus 5.5% for the S&P in the last month. And the worst sector are the oil drillers, OIH. And you can see that. Just click on these column heads. This is something that's a good idea to do every day or two. Just look at this tab and figure out what's working, what is not working. And when you find out what's working, if you're in master class, you can say, all right, SMH, I want to find chip stocks. Okay, it's simple. Like I said, go to your list, Control F, SMH, boom, here's my chip stocks. Wait a second. All right, go over here. And now I can look for potential opportunities. Now, in my opinion, all of these are not giving opportunities. However, you could look at this and you could say, all right, this stock is, sitting at its 8-day exponential right here. This is a sort of thing that, according to some people's patterns, could potentially be interesting. A stock like Marvell, same thing. These have not run as much. So I wanted to just kind of point out, this is the sort of thing you do. You can kind of take that, dump it in. You can do energy, technology, healthcare, industrials. There's a lot of healthcare stocks. In fact, there's one that I bought last week, basically using this approach, which was HCA, a hospital stock. Look at how little this stock has pulled back. And here it was, my signal was the fact that it held the 21-day exponential. My stop is under that. Boom. I'm not recommending. I'm just saying, like, this is a sort of approach or something like that. This stock has, the upside for me. This stock is broken out. So from my perspective, a stock like this, can advance to earnings. That's my strategy on this. My approach is as things return to normal, people go back to the hospitals, they get those elective surgeries, things start working, things go back to normal. So that's kind of what my thesis is. You want to have a sense of what's causing it, but at the same time, this is an example of how I dug into healthcare using this approach that I'm showing you now. Okay. So remember, you use the stock signals here for that. And you might have your own list of stocks. It's not that hard to come up with your list of favorite tech stocks, your favorite list of energy stocks, but always try to base that on, what you're seeing over here on this macro tab. There's a macro tab and the micro tab. And I just flip from one to the other, and I use one to build the other. Okay, next. Let's see if our scan finished. And it did. All right. Scan for pullbacks. Let's take a quick look at this before we go on. I'm going to go back now to scan for pullbacks. This is slide number 13. Here we go. Here it is. All right. So this is what we did. Let's take a look at the results it gave us. What I'm going to do is I'm going to sort by average volume. That'll give me the biggest stocks first, most likely, that I might recognize. And now again, none of these are recommendations, but this is just an example of how some of these things will work. And so these are stocks now that are under the bottom of the Keltner channel that have totally gotten hammered. And in this case, they're pretty massively oversold. But you might find other things in here that are potentially interesting. Some of these scans will sometimes find really interesting ones. And like, for example, this is the one that is in some ways the most kind of crude, because something can be down a ton and it will still show up, but you still will find things in here. Like, for example, a name like Comcast here. This is one from my perspective, maybe not a swing trade, but income trade. A name like this, there's a lot of ways you can look at a stock like this and think about this being a sort of put selling sort of strategy, which I don't do, but you can also find potential opportunities, things like that. So this is what the results gave us. Now, what I'm going to do is I am going to skip ahead. I already ran these scans. So this scan right here is number 3. All right. Now, I want to share with you guys, these indicators that I created, this moving average cross and the days and the next scan are really powerful. And I don't know a lot of other people who have them available in such a searchable scalable way. And this is what TradeStation makes possible. This is sort of thing that, you know, people learn in masterclass. So for example, what this will do is this can find stocks. I'm going to just explain what it does. Same thing. We're looking for 500,000 shares a day, but we're looking for stocks where the 8-day rose over the 21-day in the last 10 sessions. There's a custom indicator that I've created, which I shared with you right here. It's on this radar screen as well. And this indicator is called MA Cross bars since, which is this indicator. So remember I told you it's going to show you if it's a positive number, it means that basically what this means is the number 4 here. Let's just look at this Xilinx. It means that the 8-day exponential rose above the 21-day exponential in the last, 4 days. And right here, see this blue line? It counts that. If it's a positive number, let's look at some like bad stock, like I don't know, like I just think of something that's not doing well recently. I don't know. This was one that's not. So this is a negative number, -12. If you look at something like VLO here, so this stock, you know, this one it's negative. Okay, because it's under and it crossed to the downside 12 bars ago. That's what this is showing us. So we look here on Scanner. We can then find these stocks that have a positive. Wait a second. I'm looking. So this is a scan result. I'm sorry. I'm going to PowerPoint. Right here, this shows stocks that had the MA cross more than 0 bars ago and less than 10 bars ago. Remember, you have to put in both sides of it for this. You can't, if you say more than 0, it'll find stuff where the MA cross happened 80 bars ago. If you want recent ones, you have to put the indicator in twice. And this is what it looks like. Wait, before you do, let me just tell you, the other thing I added to this was, we want the price to be up less than 5% in the last week. The nice thing about that is because like something where the stock could go up 80% in a week or something, and it's going to be all these signals that are not necessarily very tradable. So we want it to be something where it's still kind of tradable, where it has that downside close. And that's what we want to be doing here with this 5-day change less than 5. So this is what it actually looks like. And you guys can build it based on the PDF I gave you. These are the different pieces to it. And if you look here, you can see I put in 8-day, 21-day, exponential. You have to change things here, okay? You have to go in and you have to change this to exponential. You have to change what days it is. And don't forget, you have to do it on both instances of the indicator. This one is less than 10, and this one is greater than 0. So that's going to find values between 0 and 10. Just don't forget to change those settings because it's something that a lot of people, I've done myself, okay? I've wasted a lot of time making that mistake. All right, so volume average, this will just find now stocks for us that recently had a bullish cross and is down, or that are up less than 5%. And what is this going to show us? Here's a stock like Ford. That's kind of interesting. Stock like Advanced Micro. This just had the cross. I mean, from my perspective, I don't know about that, but this is an example. Now, the other thing you could do with the stock like this is you could say, I only want to find stocks where the 50-day moving average or the price is over the 50-day or something like that. So all these scans I'm showing, you can refine them down further. But here's a name like Microsoft or something. All these sort of similar examples, and some of these are, potentially, opportunities that you might want to, just see. I'm not saying that any of these right now are instantly buys. I just ran this scan for the first time in a couple of days this morning, so I'm not even sure of all the results it's giving me. Now, the other thing is you can go to one of these scans. Once you've created the scan like this one, I can go here and let me just show you down the side here, schedule. You can set this scan to run like every day. And then if you just go to it, it will show the results, the most updated results. So you can set it to run at like 10 o'clock every night, come in the next morning and boom, there are your results. Okay, so that was slide number 15. So return stocks with the 8-day exponential moving average above the, all right, 8-day above the 21-day in the last 10 sessions, and they're up less than 5% in the last 5 sessions. Next, scan number 4, finding swing trades number 4. And this is a really cool one because, all right, a stock can pull back, hit that 50-day moving average, and then sit for like 3 or 4 days and then take off. How do you find those? And so this is a special indicator I created because this thing over here called MA test, it will show you if the stock is at the moving average right now. Like, for example, this stock was actually touching the moving average, that blue line, But if I want to say I want something that recently touched, so let's just reload, erase all this, go to data, import symbol list S&P 500. Okay, what if we wanted a stock that pulled back and it's kind of starting to bounce? So this is an indicator now that we can do for that. And this scan I also built. Don't forget, you're going to have to change things when you build it yourself, but you're going to go here on the slide to page number 16. All right. And this is what it looks like. Let's see the results. I just ran this one this morning. I haven't looked at it yet. So what this is finding is, this is going to find stocks where, trading at least 500,000 shares a day. And in this case, we want the 50-day over the 200-day moving average. So what we're basically doing is we're putting in two indicators. Oops, let me go to criteria. Moving average here, moving average here, and then we have to make sure they're set correctly. So the 50, and this is set to 200. So you can have, sometimes you can put a raw number in over here, or you can compare an indicator to another indicator, which is really cool. All right. Next, what we want to do is we want to basically, let me see how I wrote this one. I'm sorry, I'm looking at the wrong thing. All right. So what this now does is days since MA test, again, greater than 0, less than 10. Now, what I did with this one was I set the 50 simple. So that is going to look for stocks that tested their 50-day moving average in the last 10 sessions. Simple. You could put in 21-day exponential, just you have to write the word exponential, make sure you don't misspell it. Same thing. And that's exactly what the results of this has given us. So this is now going to find stocks for us. Wait, there's one more thing. The other thing I added was I wanted the stock to be straddling or touching the 8-day exponential moving average. That way it's not up too much. So the last indicator I added was low below the exponential moving average and high above the exponential moving average. And so basically all these stocks are stocks that tested the 50-day moving average in the last 10 candles, stocks that have a 50-day above the 200-day, and they're still touching their 8-day exponential. So this is now going to find companies that haven't run too far. A stock like Morgan Stanley, and that's a pretty interesting looking chart in my book. A stock like the other one that came on my list, I think was like a name like an Under Armour here. So these are just some of the sort of things you can be doing, and all these are kind of tools that can help you, do the combination of what you're looking for of finding the bullish trend, but at the same time, finding the opportunity. You have the pullback, which is going to potentially give you the opportunity, but then we have other things in here, the 50 over the 200-day, for example, 50 over the 200-day in this case tells us that we have a bullish trend. Remember, at the beginning of the webinar, one of the things we said was we want to establish trend. 50 over the 200-day, that establishes your trend. If it pulls back and it touches the 50-day and it's holding that 8-day, that's your opportunity. So let's just go on now to one last thing that I want to share with you guys is I just call this active underliers. Now, in fact, let me just show you one other thing here. I should have mentioned this. Most of the people presenting this weekend are options traders, and I don't trade options as much as I used to now because I'm too busy and I can't manage that. But I love options, and I definitely want to empower you guys to use them. Now, one of the problems with options is there are some stocks that don't trade, a lot of options liquidity. How do you hone in on those stocks that are good for options and the stocks that aren't? And this is a great thing about TradeStation as well. You can put this right in here. It's an indicator called average options volume that I've shared with you guys. And the great thing about this is you can set a threshold. In this case, if you go to edit, I put in 21 days and the highlight threshold is, I think I set the 10,000. So this will do is everything that averages at least 10,000 contracts a day in the last 21 candles will highlight magenta, for example. And I could change that. I could change it to 100,000. And I could also change the period from a 21-day average to 10-day or whatever. But this is useful because this also allows me to see right off the bat, I don't really want to be messing around if I'm doing my options trading with a stock like MSCI, which trades 70 contracts a day. But it allows me to hone right in. Now, the great thing is you can do this in Scanner, and there's actually an even faster way to do it in Scanner, which is active underliers. and this is the last slide, slide number 17. And what you can just do is there's a thing called volume all options. Make sure you change it to volume all average and not volume. And what this will do is this will basically average out those options, and it will you can say I want to only find underliers to trade at least 10,000 contracts a day. And there's the last thing I'm going to leave you with. So let's take our list. We can copy from here. For example, it's weird. SNDL has traded more contracts a day. I'm sorry, I'm looking at the wrong thing. This is a column I want to look at. And what do we have? We have Apple, Tesla, right at the top of the list, like we'd expect. So let's just, let's select this whole bunch. Column, select all. Whoops. I'm just going to select the column. I'm going to go over here. I can just erase this now. And now, if I'm an options trader, I can take my active underliers, I can dump them in here, and now I can go through looking for signals as well, potential opportunities, same sort of thing. And I know that these are going to be things that are trading 100,000 contracts a day, kind of make my life easier. Can I share the recording? I'm not entirely sure how that's going to work. Nico can help you. There will be definitely more information shared after this event, but it's been great talking to everyone. And the zip file, like I said, it includes the ELD, which includes these indicators. It includes the workspace, and it includes a PDF. So I skipped over the last few scans because I wanted to show you the basic way to do it, and then the PDF includes instructions for those other scans. The only thing I just want to remind you of, and I say this as someone who's done this a few times, is that make sure when you're using Scanner that all those little things are checked correctly. Because otherwise you might say, why is it giving me no results? Just always take that second look and make sure you don't misspell a word like exponential. So it's great to talk with everyone. I'm actually doing a masterclass again in 2 weeks. I do it every other week. Love working with you guys, and hope I see some of you guys soon. Thank you so much.
Awesome. Thank you, David. That was awesome. Guys, you guys can see more of him in the masterclass. I'm going to put a link to that. We're doing a deal for All Access Pass right now. So it's a great chance to get both the masterclass and our other channels and other coaches. Real quickly, guys, this is the last session of the day, but I am going to share the schedule for tomorrow. So yeah, you guys will be able to, just so real quickly, tomorrow we're starting on April 11th. We're starting at 11 a.m. Eastern time with Jesus Nava. He, of course, he's our platform, master. He'll explain some stuff about the platform. Then we have CME is coming with their chief economist, Blue Putnam. And then we have a bunch of our coaches. We got Matt coming, Ryan, Shantanu, Marcel, who's a new person who's starting to work with You Can Trade. And at the end, we do a Q&A panel where you can ask any question you like. That's all for today, guys. Thank you guys all for coming. And we'll see you guys tomorrow. Same link. I see that someone's asking for the PDF. Let me link it once more. The PDF is part of David Zip, so just unzip the file and you'll find that exact file right in there. There you go. It's in the chat.